Coming up on Business Incorporated. China and Cote d'Ivoire pledge to boost agricultural exports. South Africa's food basket increased by 6.3% year-on-year. And Zambia Airways launches flight operations. Hello, welcome to the program. I'm Ladi Williams. First off, let's see how your money's performing in today. Starting with the African market, we see bearish sentiment permeated trading today. It's a persisting negative sentiment in Nigeria's NGX shedding 0.06%. We see South Africa down marginally, and EGX 30 of Egypt followed trend in Nigeria, but with a deeper loss of 0.72%, while Nairobi's stock exchange of Kenya closed negative on Wednesday, decreased by 0.43%. And it's all green trading today at intraday. The Middle East, see Abu Dhabi index is up almost 1%, while Dubai's index was also positive, but just about 0.5%, is still within the region. Saudi Arabia added much lower, just about 0.30%, while the Qatari index is up 0.44%. All right, let's head on to Europe now, where European stocks are trading down over concerns of Omicron variant. Well, let's bring in Chip now, right there in Berlin. Hello, Chip. Great to have you.
Hi, Ladi.
Yeah, so see, markets can't seem to find a direction. It's been up and down in the last couple of sessions. What's going on?
Well, the markets are, of course, very, very sensitive to any news right now, and that's why they're quite volatile, whether it's, regarding inflation or perhaps, news on the coronavirus pandemic. And of course, with this new COVID variant, Omicron, there's a lot of concern about that. And we saw in the last 24 hours, of course, the United States announcing that it had discovered the first case in that country of this COVID variant, Omicron. And that was one reason why we've seen also European markets reacting as they have today, because of course that was sort of following up to Wall Street's downward trend yesterday, and of course also Asian markets earlier today. So that's obviously sort of a follow-up to what happened on Wall Street as well. But of course we also have this COVID surge in Europe to worry about, and there's of course increasingly concerned that there might be even more restrictions, travel-related restrictions that could also affect retail business in several countries, including Germany, where of course some rules that might only allow people who've been vaccinated or recently recovered from COVID to shop, for instance, would be an issue, like, when it comes to shopping for clothes and the like.
Right, and the OPEC Plus group is meeting today to discuss oil supply for the near future. What can we expect?
Well, of course, we'll be looking at how the OPEC Plus group of countries, so, OPEC members and Russia, plan to react to this new COVID variant as well. Will they, reduce or increase oil supply for January? That is a major question. And of course, since there's so much up in the air, it's really hard to say. Obviously, Omicron means that there might be more travel restrictions. We've seen so many announced in the last couple of days. And that is obviously not a good piece of news for the oil industry, because of course that means less oil demand. That's one thing. And the second thing that they might respond to as well is the fact that the United States had announced early last week that they intend to release 50 million barrels of oil of their reserve oil, because of course they wanted to tame oil prices, and that was their attempt to do that. So the OPEC Plus group of countries will potentially also respond to that.
All right, and the OPEC Plus meeting, comes amid energy crunch in Europe. How bad could the situation there get?
Well, oil prices, of course, have been very high in recent months as well here in Europe. And of course, that's also on top of the fact that natural gas prices are soaring. And that is definitely an issue for ordinary Europeans. I mean, in fact, I've also been warned by my landlord that I can expect my heating costs to go up. So the soaring gas prices come at a time when it's much colder in Europe. And that's something definitely to worry about, which is why EU energy ministers are meeting in Brussels to discuss discuss how to respond to the rising, soaring energy prices and to respond as a bloc as the European Union. And that will be interesting to watch if there's going to be any response from the EU, because of course last time they met there was no concrete response, unfortunately. Obviously this is a matter of huge concern because it affects ordinary people. This is why it matters so much, and there's unlikely to be any relief from the Nord Stream 2 pipeline, which is supposed to help deliver Russian gas to Europe, because of course Russia is not necessarily the best partner for Europe at this point, and also for the United States. And we've seen the United States also announcing sanctions, which could also affect the Nord Stream 2 pipeline.
All right, Chiponda Jimbelu right there in Berlin. Thank you so much for the update. All right, moving on now, the 2021 edition of the African Economic Conference, jointly organized by the Africa Development Bank, Economic Commission for Africa, and the United Nations Development Program. Well, the theme of this year's conference is financing Africa's post-COVID-19 development. We have our correspondent right there in Cabo Verde, Amarachi Ubani, join us right now, Business Incorporated. Great to have you on the program. All right.
Hi,
all
Ladi.
right. Hi, Amarachi. Please bring us up to speed on conversations had today.
So, Ladi, it's going to be a day of a lot of talking. And the hope here is that all this talking would translate into, action. You know how African leaders and, how people like to sit down and then have conversations and, everything sounds good, while we're sitting here, but the real work starts after the conference. So today there's a high-level roundtable on financing, which is a development priority for Africa going on. The questions they're asking: how can the continent be better mobilize natural and other domestic resources, as well as fight against illicit finance flows to improve the financing of its development? So the conversation here has been around, Africa surviving COVID-19. I've heard issues regarding, vaccine inequity and, how the rest of the world needs to, this is a time the rest of the world needs to make things right with Africa, how they also need to refinance Africa's debt, and how, Africa also needs to take the leap forward to find other legal means of financing its own developmental projects. That's the kind of conversations I'm hearing here today, Ladi.
Right, quite a tough conversations. Well, it's all about, post COVID-19 at this point. Is there any light at the end of the tunnel from the conversation so far?
Well, let's just say the right people are here. The right people are here. The president of Cabo Verde was here a while ago, and he gave an address, a very passionate address, I might add, because he was talking about how Africa has suffered so much from the pandemic, and how, the rest of the world just stood back and watched while Africa struggled, to acquire vaccines. 86% of his own population has received at least one dose of COVID-19 vaccine. And now they're looking towards vaccinating children who are 12 years and under. The country is pretty safe. I mean, the regulations are still in place. You have to wear your mask as you walk around. One of the requirements for coming into Cabo Verde is that you must be fully vaccinated. Either that or you have a PCR test done within 72 hours. So yeah, still looking at the rest of the world. He also mentioned the new coronavirus variant, talking about, how the rest of the world seems to have turned its back, on Africa. But he says, this is also the time when Africa needs to look within, and also find its own solutions. And that's also something I've heard here. The solutions to Africa's problems will be found in Africa by Africans.
Right. Found in Africa by Africans. All right, Amarachi, thank you so much for the update. We'll get more from you later on. Thank you so much.
You're welcome. See you later, Ladi.
All right, moving on now. Let's see. Stocks in Asia Pacific struggled for direction today as concerns over the economic impact of the Omicron COVID variant continue to weigh on investor sentiment. Mainland Chinese stocks closed in negative territory, with the Shanghai Composite falling fractionally to 3,573 points, and Shenzhen Component slipping 0.19% to 14,765 points. Elsewhere, the Nikkei 225 in Japan declined 0.65% to close at 27,753 points, while the Topics Index shed 0.54% to 1,926 points. South Korea's Kospi rose 1.57%, finishing its trading day at 2,945. And U.S. stock index futures rose in early morning trade following a Wednesday tumble on Wall Street after the CDC confirmed the first known case of the Omicron variant in the U.S. Futures contracts tied to the Dow Jones Industrial Average gained 242 points, while S&P futures advanced 0.60%, while Nasdaq 100 futures added 0.39%. All right, let's head on to the UK now with Juliana right there. Great to have you, Juliana. So the U.S. has delayed its removal of trade tariffs on UK steel and aluminum products amid concerns that the government's approach to dispute with the EU on post-Brexit trade rules affecting Northern Ireland. What are you hearing about this? Would this affect UK's approach to talks with Brussels?
Well, there has been a response about this leaked document from the government, and they said no, it's not going to affect them at all. Even the opposition Labour Party very rarely agree with the government. They said it's unacceptable for America to try and do this. But I think it's been a long-standing issue. I think, you know, Washington, particularly under the Biden administration, have said that if any sort of Brexit disagreement affects the peace deal that was brokered by former Prime Minister Tony Blair with assistance from the former US President Bill Clinton, then there would be absolutely no post-Brexit trade deal between the UK and Washington. This, of course, is all about the Northern Ireland Protocol. There are ongoing discussions between the Brexit Minister, Lord Frost, and Brussels. Some suggestions this week that the talks are pretty fraught, that Britain are not, willing to negotiate about the deal between trades crossing between the UK and the Northern Islands, and the rest of the United Kingdom. Those checks on goods are affecting trade, which is why Article 16 may be triggered. We don't know if that's going to happen or not. This is Brexit. Nobody knows for sure. But this leaked document saying that they would not be lifting the 10% to 25% trade tariff on steel and aluminium was leaked to the Financial Times yesterday evening, and it is causing quite a stir.
Yeah, quite a stir there with the post-Brexit issues again. Well, Tesco's festive TV campaign featuring Santa Claus bearing a COVID vaccine passport has been cleared by the UK ad watchdog, despite anti-vaccination campaigners making the second most complained about advert of all time. What's the concern here?
Have you seen it, Laddie? If you haven't, do get a chance to. The anti-vaxxers, over 5,000 of them, have written to the Advertising Standards Agency. They've ruled that the advert is fine. It's a 90-second clip that shows Santa potentially not being able to deliver presents to children because he could potentially get pushed into quarantine. But alas, he's saved at the last minute because he whips out his phone, and on his phone he has an NHS certificate. And anti-vaxxers believe that this is medically discriminating against them, and they wanted the ad pulled. It hasn't been pulled because, as to be expected, the advertising regulators here in the UK think it's fine.
Quite interesting. Well, seeing Santa in quarantine, quite interesting. Well, we still have Omicron jitters in the market. How's it looking at intraday?
Red. It's red is the colour of the FTSE. No surprises. It's been up and down really this week, but the sell-off still continues. As you said, Omicron is still a huge issue. I think the World Health Organization was just delivering some of the latest findings, and unfortunately it does appear to show that the high infection rate we're seeing in South Africa is linked to this new variant. What does that spell for travel and tourism? We don't know for sure as of yet, but as of the moment, at intraday, the FTSE All-Share is down 0.58%. The FTSE 100 is down by 0.51%, and the FTSE 250 is down by 0.73%. In the currencies market, the British pound is up on the US dollar by 0.38%, up on the euro by 0.20%, and up on the Japanese yen by 0.47%. Make sure you watch that ad.
I'm going to watch it. I am going to watch it. All right, Juliana, thank you so much. Enjoy the rest of your day.
Thank you.
All right, we'll take a break now. Commodities market update is next. Do stay with us. Welcome back. Still watching Business Incorporated live on Channels Television. Well, it's the Christmas holiday season, and turkey is perceived as a celebratory commodity. It's most consumed at Thanksgiving in the United States, while most are consumed at Christmas in Nigeria. Well, the price of turkey in 2021 has risen by 38.9% from 1,800 naira per kg to 2,500 naira per kilogram in some selected markets. Well, let's talk to Lawrence Messi now, analyst at Financial Derivatives Company, on price movement with celebratory livestock commodities. Great to have you on the program. So how steep of a price increase could we expect as we approach the Christmas season?
Thank you for having me. So naturally, we'd expect that prices should increase quite steeply during the Christmas season. But looking at the effects of COVID, the economy hasn't fully recovered. And as such, not the entire population has not been reabsorbed back into the workforce, pending the amount of layoffers that occurred last year. Despite falling inflation rates, we still believe that higher prices in some consumer goods are reducing the purchasing power of the average Nigerian. So we do expect an increase in the price of turkey due to some slight increase in demand, but we don't expect an astronomical increase because consumers are still heavily price sensitive, and as such, they might just stick with chicken.
The chicken. Well, I like my chicken, Lawrence. Well, according to the Food and Agriculture Organization, chickens contribute about 90% of world poultry meat production, while turkey contributes about 5%. The data also suggests that the trend is transitory to various regions, including Nigeria. What is responsible for this meager contribution of turkey production to the overall poultry industry?
Well, it's largely due to the current population of the various species in poultry. Well, chicken, there are about 22 billion in population in the world. Turkey, on the other hand, is about 459 million. Historically, we've seen trends in feed to meat ratios in chicken, which is actually quite good. As for turkey, it's not as effective as it is for chicken. In terms of breeds, there are about 1,600 breeds of chicken, while in terms of turkey, there are just about 110. So all in all, there's a larger population of chicken due to a lot of practices in crossbreeding, increasing their resistance to diseases, and their population has skyrocketed over the years. Whereas turkey, the population has been quite managed, and the little varieties of turkey, only few are actually produced on a large scale, while other varieties are produced more on a family, small scale basis. And if you look at all these factors combined, that can actually tell you why there's a lot more chicken contributing to meat production in the poultry industry than there is in turkey.
Right, and giving some of these health benefits, with chicken, pork, turkey, with now we have a more globally health-conscious society. Can we expect a paradigm shift in turkey consumption over chicken?
It's important to note that turkey, due to its lower population, is actually a bit more pricey than chicken. Though in regions like the United States, turkey is actually the more apparent of the two avian species. But generally speaking, turkey is actually quite more expensive. So we can expect that, to those who are higher income can switch more to turkey for its health benefits. But considering that the middle class and lower class comprise a larger proportion of the general global population, they might be willing, but they might not be able. So we can expect that switches to turkey consumption would occur mainly across higher income classes, while for now the general consensus would most likely stay with chicken consumption.
All right, and maybe we can expect prices to actually, come back down after the holidays. All right, Lawrence Messi, analyst, financial derivatives company. Thank you so much.
Thank you.
All right, moving on now. China and Cote d'Ivoire have pledged to boost trade and promote agricultural exports on the sidelines of the 8th Ministerial Conference of the Forum on China-Africa Cooperation. According to the Chinese State Councilor, China-Cote d'Ivoire relations have maintained sound and stable development with smooth progress in practical cooperation, noting that China has become Cote d'Ivoire's largest bilateral financing partner and the third largest trading partner. President Xi Jinping announced that China will open green lanes for African agricultural exports to China and set up an earmarked fund for financing imports from Africa, which will further facilitate Cote d'Ivoire's agricultural exports to China. And South Africa's food basket increased by 6.3% to 4,272 rand and 44 cents year-on-year in November 2021. The household affordability index by the Pietermaritzburg Economic Justice and Dignity Group says the volatility in food prices at the moment is driven by steeper fuel price hikes, high cost of transportation, and the weakening rand, which substantially increased the cost of agriculture as a very high proportion of inputs are imported. Statistics South Africa's latest consumer price index reveals that inflation is 5% and CPI food inflation 6.7%. The producer price index shows that agricultural inflation was 8.7%. And Africa's largest airline, Ethiopian Airlines, announced the final preparation for the launch of Zambia's national carrier, a joint venture with Industrial Development Corporation Limited. In the proposed joint venture, Ethiopian Airlines would take a 45% stake in the joint venture, while the Industrial Development Corporation Limited retains 55%. The shareholders have contributed $30 million in capital towards the establishment of this airline, and the brand new Zambia Airways inaugurated operations with its initial domestic flights from Lusaka, Zambia to Ndola, and the airline will operate 6 times a week and 5 times a week to Ndola and Livingstone in Zambia, respectively. And International Monetary Fund says Harare will not qualify for a special debt relief program until it pays off its debt to the World Bank, delivering another blow to Zimbabwe's debt crisis. Southern African country has cleared its debt with the IMF but still owes the World Bank $1.52 billion. Last week, government said external debt increased to about $13.7 billion in September from about $10.7 billion last year. During the meeting, the lender said the threat to the country's growth plans remained an unsustainable debt, as the debt represents over half of Zimbabwe's gross domestic product. According to the IMF, Zimbabwe will have to wait until conditions for international re-engagement are in place, and there's a World Bank resolved to qualify for the initiative. And the trade mission between Kenya and DRC have officially kicked off, with more than 250 Kenyan businessmen and investors currently in the DRC for a 15-day trade mission, which began on Tuesday. The bid to seek out potential buyers and sellers. The mission, which will see them visit the cities of Kinshasa, Lubumbashi, Goma, and Mbuji, is aimed at exposing Kenyan entrepreneurs to business opportunities in DRC, which is Kenya's 6th largest international trading partner. In April, during his visit to the DRC, President Uhuru Kenyatta and his host, Felix Tshisekedi, signed a trade and investment agreement promising to deepen trade ties between the two countries. And tea farmers will have an easier time accessing credit after the Kenya Tea Development Agency lowered interest rates for loans issued by its microfinance arm, Greenland, from 21 to 8%. KTDA says the move announced will take effect immediately and is aimed at ensuring more smallholder farmers have access to much-needed credit to boost farming and ease existing debt pressures. More than 225,000 tea farmers who are members of Greenland, together with others who will join the microfinance institution, will now get loans at a lower cost, reducing pressures that many farmers have had in repaying loans. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.
COVID-19, a new strain of virus from the family of coronaviruses, has been recorded in over 200 countries, areas, and territories around the world. The highly infectious virus is transmitted primarily via droplets of saliva or discharge from the nose of an infected person through coughing or sneezing. These droplets can then be acquired by anyone in close contact through breathing in the droplets or by touching objects and surfaces with the droplets and then touching the nose, mouth, or eyes. While it's been said that some infected persons may not display symptoms, common signs of COVID-19 infection include dry cough, fever, sore throat or diarrhea, and difficulty in breathing. Do you or someone close to you have these symptoms? Call the following numbers.